The 2008 financial crisis wasn't just a market crash, it was a turning point that changed the course of American life. In a matter of months, the world's most powerful economy was brought to its knees. Banks failed, millions lost their homes and jobs, and the very idea of the American dream was shaken to its core. But the real story isn't just about what happened in those chaotic days. It's about how the aftershocks of 2008 still shaped the way Americans live, work, and think about money today. Before the crisis, America was riding high on a wave of optimism. Homeownership was at record levels, credit was easy, and Wall Street was inventing new ways to make money faster than ever before. The stock market soared, and the message was clear: anyone could get rich if they just played the game. But beneath the surface, the system was built on sand. Subprime mortgages, risky bets, and a culture of too big to fail set the stage for disaster. When the bubble burst, the fallout was immediate and brutal. Lehman Brothers collapsed. The stock market lost half its value. Unemployment soared to 10%. For many, the pain was personal: lost jobs, lost homes, lost savings. But the crisis also exposed deeper cracks in the American system. It revealed how fragile the safety net really was, how quickly trust in institutions could evaporate, and how interconnected the global economy had become. The government responded with unprecedented action. Trillions of dollars were pumped into the financial system to prevent total collapse. The Federal Reserve slashed interest rates to zero and launched massive stimulus programs. Congress passed the Troubled Asset Relief Program, TARP, to bail out the banks. These moves stabilized the markets, but they also sparked a fierce debate about fairness, responsibility, and the role of government in the economy. One of the most lasting changes was the rise of a new skepticism. Americans began to question the wisdom of Wall Street, the motives of big banks, and the promises of politicians. The Occupy Wall Street movement captured the anger of a generation, demanding accountability and shining a light on growing inequality. The phrase, "the 1%, entered the national conversation, and debates about wealth, power, and opportunity have never been the same. The crisis also changed the way Americans think about homeownership. Before 2008, owning a home was seen as the ultimate symbol of success. After the wave of foreclosures, many began to see the risks as well as the rewards. Renting became more common, and the dream of a white picket fence gave way to a more cautious approach to real estate. New regulations like the Dodd-Frank Act aimed to rein in risky behavior and protect consumers. Banks were forced to hold more capital, and exotic financial products faced greater scrutiny. But the debate over regulation continues, with some arguing that the changes didn't go far enough, and others warning that too much red tape could stifle innovation. The crisis also accelerated the rise of new financial technologies. As trust in traditional banks eroded, Americans turned to fintech startups, online lenders, and digital payment platforms. The seeds of today's crypto boom were planted in the aftermath of 2008, as people searched for alternatives to the old system. The idea of decentralized finance gained traction, and the way Americans save, invest, and spend money has never been more diverse. But perhaps the most profound change was psychological. The crisis shattered the illusion that markets always go up, that hard work always pays off, and that the system is always fair. A generation came of age in the shadow of 2008, carrying with them a new sense of caution, skepticism, and resilience. The old rules no longer seemed to apply, and the search for security became more urgent than ever. Contrast this with the years before the crisis, when optimism was the default and risk was almost invisible. The shock of 2008 forced Americans to confront uncomfortable truths about debt, inequality, and the limits of growth. It sparked a national conversation about what really matters: stability, opportunity, and the need for a safety net that works for everyone. So, what does all this mean for the future? The legacy of the 2008 crisis is still unfolding. The policies put in place to prevent another meltdown are being tested by new challenges: pandemics, inflation, and global uncertainty. The debate over how to balance growth and security, freedom, and fairness is more intense than ever. And the lessons of 2008 about the dangers of complacency, the importance of transparency, and the need for vigilance are as relevant today as they were in the darkest days of the crash. If you found this story eye-opening or learned something new, don't forget to like this video, share it with someone who needs to hear it, and subscribe to the channel for more insights into the world of finance and history. Your support helps us bring you the stories and strategies that can make a real difference in your financial journey. Hit the bell icon so you never miss an update. And let us know in the comments how the 2008 crisis changed your view of money and the American dream. Thanks for watching, and remember, the past isn't just history. It's the key to understanding the future.